Well, hello there, my friends. Chris Marcus here with you on Friday, February 9th for Arcadia's weekly market wrap-up. Certainly, if you've been watching the stock market, which has gotten walloped the past 2 weeks, bond market is rising as well, and wondering what's happening, well then stay tuned because that's what we are going to go through today. And our first stop on the tour here, again, looks like the Dow is down about 500 points today. Actually looks like 416 right now. But certainly over the past 2 weeks, I believe it was down about 1,000 points on Monday or Tuesday. So as you can see, it's broken below 24,000. And really the first significant declines we've seen in quite a while. Again, the talk has been about if interest rates are going up, which as we take a look at our 10-year bond chart, let's take a look at the 1 month. I think rates were up a little bit this week. We're now at the 280 level. And yeah, that's always been the problem with the whole low interest rate policy, quantitative easing, and all these other things that even Ben Bernanke said when he was launching them. That the point was you add in this extra credit, you add in this extra money, and it makes financial conditions easier, which in many ways is true. Yet what they don't mention is that you get the exact opposite effect when you take it away, which is to some degree what we've seen here, where here yields have gone up, Fed's talking about raising interest rates. China still, we haven't heard more about that story of them considering selling or at least halting or reducing the amount of US treasuries they buy, but certainly if they were to do that, that means that rates are going to go up even further. And if rates continue to go up and the stock market's going to react like that, well, that's essentially what many in the Austrian economics community have been talking about for years, when we've been saying, you know, there's some bubbles forming here. Be careful with this. Stop adding more credit. You're propping up a collapsed housing bubble with more credit. And that's why I talk a lot about gold and silver. That's why with certain cryptos that might be able to handle moving over to a new infrastructure, when you finally do have some sort of crash in these markets. And I've generally agreed with that school of thought, that when, similar to how it was the banks that failed last time around and the Fed came and bailed them out, that this time the bubbles were so much bigger that there would be no one to bail out the Fed. And I continue to believe we're seeing a shift away from life knowing King Dollar as we've all grown up in. Now, of course, if yields continue to go up, what is the Fed probably going to do? I would imagine they will come back. They'll start lowering interest rates. I imagine more quantitative easing is on the way. How soon that happens, who knows? Although certainly is starting to feel the combination of the bond market selling off, as indicated by the rising yields, the stock market selling off, makes me wonder if it's more than just another day or two where things are exploding in the markets, but perhaps the beginning of the bigger move that we've been talking about. I've been talking about here, others. Additionally, I was actually on Business for Breakfast yesterday, so if you want to hear any more in detail with my friend Jimmy Singenberger, this will be posted on the Arcadia Economics website by the time you're watching this video. I started the 30-minute mark there, so if you'd like to hear more about our talk about the markets, you can click on that one. And let me move my screen here a little bit. And again, why do you see so many of these things happening here? Actually, the host of that show that I was just interviewed on, we're going to get him on our Arcadia channel to dig into the whole Uranium One scandal, some of the things that if you've been following, I couldn't tell you for sure because sometimes the challenge today with the internet and so many different sources of information is often really grasping what's accurate, what's truthful or not. But all I can say is that based on what I've seen, in my opinion, it sure appears as if a lot of household, high-level government official names that we're familiar with, it seems to me that there's a lot of evidence, and certainly I've heard from people that I consider pretty well researched who seem pretty pretty convinced that names like the Clintons, I keep hearing a lot of, let's see, rather than what I keep hearing, if we have any good bullets here. Here's talking about the FBI investigation, Russian uranium dominance strategy involving 10x. God only knows what that is. But we'll get Jimmy on there to talk a little bit more about it, with the point being that I hear there's a growing possibility that names like the Clintons and the Bushes may be going to jail, and just incredible stuff that's been going on, which at the same time you have what's happened in the financial markets and looking like the bubble is teetering a little bit here. Again, I don't think most people have any idea about some of these revelations that are coming out, and certainly to the degree that if they are accurate, as seems to be increasingly documented, I mean, that's another big factor on a very fragile financial market. Again, I think that's why you see cryptos, despite that they're, and we'll get to the cryptos later. I know people, there's some out on the ledge, but we can reel you back in today. It's going to be okay. Because at the end of the day, you have a dollar-based, debt-based financial system that, you know, I mean, it's mathematically impossible to ever repay the debt. I mean, we're not, it's past the point of no return, which doesn't mean, and I used to worry a lot about, you know, is this going to be complete apocalypse when the dollar goes down? And I don't really believe that's the case anymore. So, not only because, but partly because a lot of that infrastructure is being done in a more truthful and transparent manner in the crypto sector. So certainly, and we'll get back to the cryptos in a little bit here, although I don't think that by any means, I know everyone's worried about if the cryptos collapsed and it's over and it's done. That ignores what the actual underlying technology does, which is incredibly valuable. And certainly there are going to be a lot of cryptos that may ultimately be worthless, yet keep in mind that while prices are down, Bitcoin, for example, was $1,000 at the start of 2017. So depending on which portion of the graph you pick, it makes a difference. And really what's relevant going forward is what's going to happen next. And I think all these factors are combining. Another interesting one here on silver doctors. Mining costs are rising. The market will force a higher silver price. With Chris Marchese on my friend Jason Burak's Wall Street from Main Street. Did an interview with Jason a couple months ago. Really smart guy. So if you can see here, pull up the YouTube link. I'm looking for, I've not heard this one yet, but we'll go into my playlist. I guess the name there is Chris Marchese, Silver Miners in Trouble Again. So something to check out, because the whole point is that in addition to cryptos, there's silver and gold, which I won't ramble on again today of the 8 million reasons that I do believe the market's incredibly manipulated. Yet, with that said, I mean, we've talked about Keith Neumeyer before of First Majestic Silver, mentioning that it cost about $15 to get an ounce of silver out of the ground from an existing project, with new projects to develop costing more in the range of $20 an ounce. And especially if we're hearing from Chris here that mining costs are rising, I mean, you have a bit of a natural floor. And one of the things that's nice with gold and silver is that all of the reasons that are in place there and that have driven cryptos in many cases are certainly in place with gold and silver, and you get the additional advantage that they are pretty much at low prices, unlike the cryptos, which have already gone up a bit, but 13, 14 gold, silver 16. You can see on February 7th, the blue line there just got pummeled again. So the whole thing with the precious metals is that when they finally do go, I think we'll see stunning numbers. I keep thinking back to, we can go and Google the trader transcripts that were released in one of the Deutsche Bank acknowledgments of manipulation in the precious metals markets. Actually fascinating stuff. If you type Google, if you Google Deutsche Bank gold and silver trader transcripts and listen to some of the things that, it's not like they got caught, sneaking around. I mean, they were bragging about, let's smash the bid, and a whole sort of things, especially if you go back to 2011 when silver hit $49, and you can actually look up transcripts from that period of time where you hear them giggling about manipulating it lower. So whether this is right or not, when I've thought about what really is a true fair value of silver, I mean, nobody really knows because it's been so distorted for so long, yet it was trading at $49 when perhaps, I wonder more and more if the currency system was close to going off track back in 2011. But if you had $49 silver and same conditions then, and it seems like there's a high correlation of why it got hammered in the middle of the night. I've always tended to think that the floor on a freely traded silver would be at least $50. When I hear multiple $100 numbers, based on my feel of everything that I incorporate, that I've studied and read in the past decade, I think probably, I mean, even the US debt clock has silver at $800 an ounce or somewhere around there. And then of course, you factor in that there's $21 trillion that the government has apparently lost, how that accounts for the money supply. I mean, so, and then add on, if the Fed starts printing again, eventually that number moves. But just in terms of, if nothing else changed except silver were freely market traded, I would think well over $100. And should anybody be interested in buying some gold and silver, the place I recommend, I actually write for now as well, is Miles Franklin. You can call Andy Schechtman over there. Really good man, does great business, and certainly that's where I go for any gold and silver or other precious metals. Great website too. Obviously I'm biased to the blog here because I am fortunate enough to get to write a couple articles a week, which has been a lot of fun. So, and also one last development that happened with the crypto market this week. It's interesting. Everyone's wondering, our government's going to shut them down, our central bank's going to end them, which ultimately, I guess you can take from this what you will, but the way I think of it is almost as if you said, are they going to ban the internet, or are they going to ban cars, or are they going to ban electricity? Maybe they will, maybe they'll try, although the beautiful thing about it, and here's Austrian economics in action, is that, if you banned all these things in one country, they're going to get left in the dust by the rest of the world adopting technology, using it productively. So along those lines, to see the CFT essentially give a green light and take a do no harm approach, here's a quick quote by Christopher Giancarlo of the Senate Banking Committee. Do no harm was unquestionably the right approach to the development of the internet. Similarly, I believe that do no harm is the right overarching approach for distributed ledger technology. With the proper balance of sound policy, regulatory oversight, and private sector innovation, new technologies will allow American markets to evolve in responsible ways and continue to grow our economy and increase prosperity. Well, there you go. A regulator saying something I actually agree with. I didn't know if that was ever going to happen in my lifetime, but must be my lucky week. And a really interesting comment there, because they're essentially giving the green light, and to the degree they're talking about regulatory oversight, whether the CFTC or the SEC are the perfect units to be doing this is perhaps a question for another day. Yet still, I think the fact if there's regulation that's cracking down on things that are scams, of which there certainly have been plenty already, I'm sure there will be plenty more, and anything that promotes honest and fair, transparent commerce is a good thing. And in either case, a lot of folks believe this to be a big hurdle going forward for the crypto space. And a quick look at prices: Bitcoin back up to 8,600, Litecoin 158 bucks. And personally, I'm kind of fascinated to see the next couple of weeks in the crypto space. To the degree that I think the CFTC announcement is rather significant, we'll see if that continues to get priced in. And also for those who are fans of Cliff High, whose webbot has had some very stunning crypto predictions, and he's been talking for a year about a 13,888 floor in Bitcoin, which, given the volatility, isn't really all that far away, and he's consistently had it show up in his data for, I think, the third week of February. So by all means, that doesn't mean go mortgage the house to buy Bitcoin, but to the degree that Cliff's had a lot of interesting work, and I think he knows his cryptos, and certainly his explanation of how all of these things are fitting together has really added a lot to my perspective. So hopefully for you crypto investors out there, good times on the way. And with that said, we're going to wrap up for today, but leave your comments below. Thanks for watching. Hope you have a beautiful weekend, and we will see you again next week.